Good morning. Ira Epstein with your morning flash update. And this update is for the morning as we're sitting here now on the 19th of February, Wednesday, 2025, about 8:20 a.m. Central Time. So we're starting off in a down day in the stock market, as you could see. All the indices lower. The gold market tried the 2964 level, has since sold off a little bit. Dollar index is slightly higher, but it's a very mixed bag as I look around at all the different currencies, some up, some down, no real pattern going on there. Bonds and notes still taking on and gathering just slightly more yield each and every day. We had another good run up in the natural gas, but you would expect that. The cold weather has dropped down now from the Midwest to Texas. Then it's going to shift a little bit. And next week we'll be in the 40s in the Midwest, and this thing will be, at least this stage, over. But as you get into March, these don't last anymore. So you're coming to the very end of all that. In the grain markets today, you can see the corn down 1, wheat down 5 in the KC, bean market down a penny, oil still higher on the day. So let's take a look at the news you're going to get today, because I think that's going to be fairly important. We had the mortgage market headline numbers come in. You were down 6.6% in the headline. You're down 5.9% in the purchase index, and the refi was down 7.3%. Things get even worse when you come over to the housing starts. They were down 9.8%. They only expected it down 6.6%, so that's a lot worse. The permits were up 0.1%. They expected it down 1.6%. So the books seem to be filling. They're getting a little bit of action there. But if you look at Toll Brothers, you can see they're down 5% pre-market trading. I don't think things are going to look that pretty at this point. I think the combination on affordability, still rates relatively high, uncertainty about financial well-being, it's all weighing in on the market. Redbook weekly sales, these are strong numbers. Normally they're running about 4.5% to 5%. Now you're 5.8% in the weekly retail. And when you look at them in the week ending February 15th versus a year ago, up 6%. That's a pretty good number. When we look at the FOMC minutes from the January meeting, they're coming out at 1 o'clock today. We're going to get the API numbers coming out at 3:30. In New Zealand, they went big. They cut a 50 basis points, as was expected. So they took their rate down from 4.25% to 3.75% last night. But they say they're going to have smaller steps from here on. So quite a bit of action, as you can see, going on in the marketplace. Now, what I'm going to do today, later in the day, I'm going to do a special report on the dollar. Remember, we did one 3-4 weeks ago. I'll bring you up to date, and then we'll move on to other things that we look at. But because of the tariffs, because the dollar has sold off from the price count that we were looking at, and I'll review that in the special report, has the market changed its course? Are we going to start seeing where foreign currencies start actually gaining against the dollar? We could be at that turning point where the dollar sort of sits and the benefits of the cuts that the other currencies have been doing starting to be seen. We're going to find out. Let's look at the dollar index. Look for an email on me about that, and I'll talk about it at the end of the day video. With that, I'm Ira Epstein. You have a great trading day, and I'll catch up with everybody tonight. Take care.